Good morning from London. This is Bloomberg Markets Today. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. With the cash trade just less than an hour away, here's what you need to know. European futures turn lower. FOMC members Bostic and Mester affirm their higher for longer views, while the ECB's Kazakhs warns against hasty action. Asian stocks are in the red, led by a Hong Kong tech sell-off. Attention now turns to Nvidia's earnings tomorrow. We'll hear from the chip giant's CEO. Plus, not 5 years anymore. JPMorgan boss Jamie Dimon ignites succession talk at America's biggest bank, signalling his retirement is closer than ever.
A quick check on the market. Some of that red on the screen Anna was just referencing bleeding into the European session. Euro Stoxx 50 futures down by 0.3%. Some underperformance in the FTSE 100. That's risk sentiment turning over. You're seeing it show up in the metal space as well. Copper, gold retreating from those record highs. Markets today starts right now.
I was on the record before saying I was at the median, which was 3. The developments I've seen in the economy right now, I would not think that that's still appropriate because the inflation risks have moved up.
Cleveland Fed President Loretta Mester speaking exclusively to Bloomberg's Mike McKee yesterday. Good morning, folks. We've got a lot to talk about. Central banks, once again, take centre stage as we try and parse exactly what the data means to the central banks and what ultimately it means, therefore, to markets. There has been significant pushback, and I suspect it may continue today from central bankers on the idea that inflation is coming back under control. The immaculate disinflation narrative is intact. We had that payroll data and we had the inflation data out of the States that gave the market maybe hope that things were moving in the right direction. But over the last couple of days, we've started to see yields reversing. It's been a really interesting reaction in other asset classes as we've watched them digest all of this news as well and this central bank speak.
Yeah, it seems as if these central bankers are, in particular at the Fed, and let's draw a distinction here because this is increasingly coming into focus this year, but definitely Fed voices saying, yes, it's encouraging what we got in the most recent inflation report, but it's not enough. Doesn't give us the confidence that we need.
I think what's interesting is how different the Fed and the rest of the world really is, especially when you're starting to hear some of the commentary that we had actually attributed to the Federal Reserve. Remember James Bullard as well saying maybe we talk about a hike at the Federal Reserve. That was quickly thrown cold water on. Now other central banks around the world are talking about the same thing. The RBA,
well, I mean,
for
that did get into conversations with Mester yesterday, didn't it? There was a line saying that she's open to the idea of a hike. It's not the base case, but she is open to the idea of a hike if the data warrants it, which does take us to the RBA and the conversations.
The Australians, you talk about the fact that the Fed feels different to the rest of the world. Does it?
Not the RBA, maybe.
The RBA feels very different. I'm really intrigued to see how the story develops here in the UK. We've got inflation data coming up over the next 24 hours. What is that going to tell us about how the narrative develops here? Is the market, is the Bank of England getting over its skis in terms of its expectation that it can cut rates aggressively? That certainly seems to be the narrative. Ramsden's out in front. Maybe you start to see rate cuts coming through. But the data may tell us a different narrative. Inflation here feels sticky still, and that's going to be a problem.
Right. Well, we're going to get inflation data tomorrow here in the UK. This time tomorrow, we'll be digesting that. 2.1% is the expectation. So it might be sticky in some places, but overall, that is the number we're looking for, which isn't far away from, well, it's in sight of the target for sure.
But is the risk to the upside on that number, I think, is kind of what people are trying to figure out.
And the role that wages play, I think, is really fascinating here because we've got real wage growth. We've talked about that a few times here in the UK, and this is the story for 2024. Ben Broadbent, though, giving his last speech, his last address at the Bank of England, and this next vote in June will be, I think, his last one. Really interesting links he's drawing between real wages and disinflation. He's saying that actually, if you see a recovery in real wages, that helps disinflation, which sounds a bit, you know, how does that link up? But actually, he's talking about needing to overshoot on wages. That signals normalisation.
It's interesting that we talk about that because even if we talk about those early signs of what that uptick in inflation looks like, whether it's coming from the wage story or if it's coming from certain industry surveys, for example, we were talking about this in yesterday's show quite a bit, that there are pieces of the data that are already ticking higher that people are pointing to us as leading indicators for the UK inflation story. What's the trade here? What do you look at as the leading indicator when you're talking about global central bank policy? I'm going to bring it back to the RBA here because it feels like, at least if this 2021 deja vu that I seem to be having for central banks and for the metal space, the commodity-exposed economies always kind of moved first or saw the early signs of that kind of inflation.
It's really interesting, isn't it? So copper's been up, gold's been up. You've now got wheat starting to track higher as well. So that kind of inflation story, that narrative, may be starting to get embedded into the commodity space, not just in the metals, more broadly as well. But it's really interesting. Bitcoin's been surging over the last 20. The markets I'm finding really confusing. The message Bitcoin is sending is one of exuberance, yet you're starting to see some of the commodities maybe rolling over. The Nasdaq was at a high yesterday, but you see a tech rollover in China. Really kind of, so the markets, I think, are really finding it hard. Now, the markets are always right, but the markets are finding it hard to be right now. And which market you look at to be right, I think, is really challenging.
There's a lot of markets. There's a lot of right.
But it's really difficult, I think, to get a sense. The markets are clearly finding the narrative difficult.
Yes.
They want to be exuberant, but there's so many challenges to that.
But it's a lot of happy talk, as Jamie Dimon told us last week.
Well, I was also going to say, it depends on who you're asking, right? You talk about are we talking about institutional investors, talking about hedge funds, the smart money here? We're talking about retail investors. Who's driving the trade right now?
Shall we move on to some of the corporate news flow this morning? We've got AstraZeneca out with some new targets. AstraZeneca, the red headline tells me this morning, to deliver $80 billion in total revenue by 2030. And this coming from a CEO who, 1 year ahead of schedule, has delivered on targets he set some 10 years ago. So this is the story about AstraZeneca this week. They're having a capital markets day. We're going to be speaking to the CFO of AstraZeneca to get a little bit more of a sense of where the business goes. But a lot of questions to answer here about how they get to this kind of growth level. What are the drugs? Clearly, oncology is the focus for them. But what about obesity drugs? These have been, of course, such a talking point over the past year.
Did you read the John Author's piece? I think it was this morning. I've been reading. I read sort of 2 or 3 back-to-back this morning from him, having missed out over the last couple of days. There's over 100 obesity drugs in development right now. The space is getting really crowded. Now, is the pie going to be big enough for everybody to enjoy some of the huge market that could be out there? Or are some of these drugs going to come through and be at a significantly lower price point and actually end up sort of taking maybe some of the money away from Lilly, taking some of the money away from Novo Nordisk? But it's a really crowded space. So I'd be really intrigued to know, and we'll hear from the CFO very shortly, about how much they are going to put into that space. Has it already got too crowded?
We should also mention some of the other healthcare companies that are breaking this morning. GSK, a red headline crossing the Bloomberg terminal, looks like their asthma drug, cutting asthma attacks in their phase 3 SWIFT trials. So some positive results there. They're saying it's currently not approved, however, anywhere in the world. But again, some positive results, perhaps in the market reacting to that at the open.
There's no news from BHP yet. I was on tenterhooks waiting to see. Tomorrow's the deadline, 5 p.m. here in the UK. I was wondering whether that news from BHP on the raised offer would be coming through. It hasn't. We have to wait this time tomorrow morning. Maybe
it'll
we'll be
come when you
about
least expect it.
Shareholders still deciding who they think they believe in most to deliver on those ambitions for the copper business. Just on GSK, there was further news flow around legal challenges around Zantac still hanging over this business. So there was that story yesterday. So we'll weigh up the negatives and the positives when we get to the open in around 53 minutes' time. Let's talk about Succession, shall we? And I don't mean the TV drama. I mean Jamie Dimon.
Same thing, isn't it?
Different sector. I mean Jamie Dimon, not 5 years anymore. So for the longest time, whenever he was asked about Succession or how long he'd be in the CEO job, he used to say for 5 more years. And I cannot really believe how long he's been in this post. Nearly 20 years. 2006, he took over as CEO. You know, we remember covering the GFC, and he was the CEO in post at the time. He was the one who was going to those meetings with all those other banking executives when talking about bailing out Wall Street. So he's been in this seat for a very long time. He says he's still got the energy. He's still got the energy that he always had, but it'll be for others to decide. Many prongs to that conversation, but it was one of the elements that led to a drop in the share price.
It did. He talked about buybacks. Remember, Jamie Dimon has been very vocal about not only the consumer strength, you mentioned the happy talk comments he had, as well as the investor day. He's also been a really big lobbyist for the banks, for the consumer, especially when it comes to Fed policy, to the FDIC, and of course to some of these regulations that Washington is really trying to kind of push down Wall Street's throat, basically, or at least Jamie Dimon would say that in the wake of the SVB collapse. And Jamie Dimon has really been kind of pushing back and winning.
Basel III Endgame. Doesn't it sound like the worst film you've ever seen?
We're back to movies. We've got Succession, we've got Basel III Endgame. His comment about buybacks, actually, at some point he was always going to have to go. It was just a matter of time as to when that was going to happen, and the fact that he's now kind of signalling that maybe that is on the cards, I think was, to a certain extent, inevitable. But I think his comments on buybacks were amazing. he's signaling that not at this price. Are you crazy? At this price? No way. The stock's trading at a price to book of 1.83. It's had an amazing run.
Yeah.
You look at the price to book charts on your Bloomberg terminal, you see it's right at the upper end. It's traded at really elevated levels. He's basically saying, I don't think is he being a sell side analyst here?
Well,
And basically saying, is this a sell note from Jamie Dimon on his own stock?
How much is he spending time with Marko Kolanovic, really? You know, they're obviously speaking from the same place here. I mean, Kolanovic's view about the whole market. He's the one bear left, reiterating just yesterday that don't buy stocks view. Plenty of reasons for that. Valuation, which applies to the JPMorgan share price, perhaps. Restrictive rates, elevated inflation, consumer stress, geopolitics.
We feel like in a very weird era at the moment where Mike Wilson is turning bullish and Marko Kolanovic is the sole bear on the street, and Jamie Dimon is not excited, perhaps, by the stock price. I mean, that's wild to me. I think to me, again, I'm going to bring back to the regulatory story because I think that one's fascinating. Because in his Investor Day presentation as well, the JPMorgan story said that 2/3 of their checking accounts would have to pay an increase of a monthly fee if the current kind of capital requirements were actually in place. They're not saying that's JPMorgan's way of handling it, but they're saying that's how dire the situation is. That's what Washington's asking for.
They think this gets passed on to the consumer. It weighs on the consumer, which is why they've been such strong
Make it about politics. Make it about the politics, basically.
Well,
make it about the consumer.
And it was even made about European politics recently. Emmanuel Macron talking to our editor-in-chief about this very subject, saying if the Americans aren't going to implement, this Basel sequel, then why should we?
All of this doesn't matter because Nvidia's out tomorrow.
Excellent. Okay? That's all that matters.
It's all it's going to.
And we'll have some inflation out of the UK to talk about tomorrow, so we'll get that story to you. Let's tell you what is coming up today. All these other things that do matter. Macy's is due to report earnings before markets open in the United States. Then at 2 p.m. UK time, the Fed's Christopher Waller will speak, John Williams, Raphael Bostic, Thomas Barkin. They're all speaking at separate events, so I don't know which one you tune into, but there's a lot of different voices to listen to on the Fed story today. Then at 6 p.m. UK time, Bank of England Governor Andrew Bailey is due to speak at the London School of Economics. Also today, we're watching out for Nigeria's rate decision. Bloomberg Economics expects another 200 basis points increase to follow the similar move in March.
What we're going to talk about next, we're going to take you back to what is happening in healthcare. The Astra CFO is going to be joining us. We haven't had an investor day from this company in over a decade. Plus, we're going to speak to the SEB Bank CEO. European banking deals, what's happening with the Riksbank, should Sweden join the euro? There's lots to talk about there. The corona very much remains under pressure. That's a talking point in Sweden right now. Up next, we'll also take you back to what is happening with the markets. We need to talk about rates. We need to talk about central banks. We've got a great guest coming up to discuss all of that. You got any questions you want to join in the chat this morning? Please do. We'd love to hear from you. IB Plus, BB TV Go. That's the function. This is Bloomberg.
South Africa's most important election since the end of apartheid focuses on infrastructure challenges, economic growth, and political fragmentation. Bloomberg's Jennifer Zabasaja reports live from key battlegrounds in Johannesburg, Cape Town, and Durban.
We think that South Africa is an exciting part of the world.
South Africa is a thriving and vibrant democracy.
There's a lot of expectation for the election.
Coverage begins May 27th on Bloomberg Television. Context changes everything.
Welcome back to Markets Today. We are 45 or so minutes away from the start of cash equities trading here in Europe for this Tuesday morning. And the European equity market picture looks a little bit sluggish. Futures suggesting a little bit of a pullback at the start of trade. US futures, though, look flat. Waiting for UK inflation tomorrow. Waiting, importantly, of course, for the Nvidia numbers tomorrow and for Fed minutes later on this week. So a lot to think about. Let's find out what is on the mind of investors and what this means for managing global banking. I'm pleased to say we're joined this morning by Ida Liu, Global Head of Citi Private Bank, who is passing through London with us on set this morning. Ida, really nice to speak to you.
It's wonderful
Thanks
to be here.
for being here. And I know that you travel and you talk to clients a lot, and so you can give us a really interesting take on what people are thinking about and talking about at this point. So on your travels recently, if you were to think about what's the biggest concern for investors, what would you suggest? I mean, inflation, AI not a concern, but maybe a huge opportunity. Geopolitics may be a concern. Where does the conversation focus?
Well, given the fact that we are an extraordinarily global business, I've been meeting with investors around the world, and there's a few themes that keep recurring amongst the investors that we work with. The first one is what's going to happen with the U.S. election. and all the other elections that are happening around the world, but from a political perspective as well. The second is on geopolitics. How are we going to navigate the ever risky and changing dynamics around geopolitical tensions around the world? And the focal there is on U.S.-China relations, frankly. And the third piece is, as you mentioned, on AI. So how do I invest in AI? How do I take advantage of the upcoming growth in AI? But also, what does it mean for my company? And how do I position my company and my businesses around the world?
So I know we'll dive into a few of those themes. If I think about the geopolitics and the bifurcation of the world, the battle that many investors will cite between the US and China, do the high net worth individuals that you meet, do they feel the need to pick? Do they feel the need to expose themselves to two different systems? How are they navigating that tension?
We're helping them navigate it because as U.S.-China relations are becoming more and more bifurcated, as you said, both countries are turning more and more nationalistic. They're turning inward. But what this means is that the supply chain demands around the world are shifting dramatically. And that means that for investors that are very globally minded, some new opportunities in different regions. So, for example, in China, a lot of flows are now going down to Singapore and countries in Southeast Asia like Thailand, Malaysia, Vietnam, Japan, even India, for example. And in the U.S., a lot more is focused on Mexico and Latin America, given the nearshoring of the region. So what's important for investors to consider is geographic diversification, some interesting opportunities in emerging markets, given the changing supply chain dynamics between the U.S. and China.
Ida, you're laying out a world which is undergoing some quite significant change. Yet I look at financial markets, it's just up, up and away. Are the investors you talk to, are you comfortable with where markets are right now? Do they feel comfortable with the pricing that they see on their screens in front of them every day?
Well, it's interesting because last year's 24% market rally was driven by 7 tech names. This year's 11% roughly year-to-date performance in the markets is much more broad. Okay, so we're seeing a much more broadening of the performance. And as you know, the NASDAQ just hit an all-time high yesterday. So still the enormous upside potential in the tech names as well.
But they feel comfortable with that. So you've got credit spreads super tight. You've got Bitcoin rallying again. Commodities are on a tear too. Are they comfortable with this kind of ever upwards narrative that they see in front of them? Because you have this on one hand, but you've just laid out a whole load of kind of quite significant risks that the markets seem to not be kind of paying attention to. And there seems to be a disconnect at the moment in the world between all of the risks that we seem to be facing and this kind of very, very effervescent market that we see in front of us.
So therefore, it's more important than ever to construct very thoughtful, globally diversified portfolios for clients, just given some of the risks that we're navigating on behalf of our clients. So on the one hand, we have been leaning into locking higher rates for longer, right? Extending duration on fixed income as one way to sort of hedge out some of the other challenges. But on the other hand, we've been leaning into equities more so than ever because we see that there's an opportunity, particularly in small and mid-cap companies, and also in industries like healthcare, like tech, digital AI that we were just talking about, and in clean energy. And some of the parallel industries as well for AI, for example, like semiconductors that are the brains behind the growth in AI, as well as energy and clean energy that are going to be needed to fuel the ongoing growth in the AI phenomenon and some of the other tech phenomenons as well. So some really interesting pockets of longer-term opportunities, both by industry segment, small and mid-cap, emerging market economies around the world that you've got to consider into those portfolios and building a really well-rounded portfolio. And the last piece I'll say is investors in the ultra-high net worth space also have a significant allocation to alternatives. Private equity, hedge funds, roughly a third of our clients' portfolios are allocated there.
I'm so glad you brought that up. One of the tailwinds, or at least one of the bull cases for this market, the stock market, the bond market, is that there's so much money that isn't actually allocated yet to the public markets. Do you agree with that, that there's still money sitting on the sidelines that are waiting to be deployed?
Yes, there is still a fair amount of cash that's been sitting on the sidelines and or treasuries that have been waiting for opportunities. And what we've been seeing over the last couple of years is, again, a rotation into alternative assets, looking at private equity, hedge fund opportunities, direct investing opportunities, because investors are willing to pay that illiquidity premium for some of the potential higher digit, double-digit returns. And also in markets like this where there is disconnect and there is some dislocation, private equity and hedge fund managers can really take advantage of some of those opportunities as well.
Well, private equity really, I think, grew and ballooned even more so than usual in 2022 when the public markets and the carnage, they were kind of escaping it almost to find that alternative investment. But in an environment where we're seeing hedging to the downside be extremely cheap, short squeezes show up in the market, what is the incentive to be in private equity right now?
The incentive is that private equity as a whole can achieve a much higher return overall than what you can typically see in fixed income and obviously even sometimes on the equity side as well. So just having that complement, a different type of return profile, greatly enhances overall investment performance.
Ida, really good to have you with us to talk about markets, but also to talk about the business of running, private banking and the Citi operation there. This is an area that Jane Fraser has obviously been trying to grow, the long-term plan around the wealth business. What does that look like right now? Is this a business that's finally on the path to gaining ground against the competition?
Oh, absolutely. I mean, we are the most global private bank in the world. We operate in 52 different cities in 20 countries around the world, and we are one of the core 5 businesses that Citi is focused on. We're very interconnected with the other businesses. The top clients of the private bank are also top clients of Citi. We work with our clients and their families on the wealth management side, but we also advise their companies on advisory work, too, with our investment bank, commercial bank, services and markets colleagues as well. So leveraging the entirety of our platform on behalf of our clients.
You talked a couple of times about the sort of huge geographical footprint that you have. Where within those geographies do you see the most excitement right now? You must bop around the world the whole time. Asia, the Middle East, Europe, America. In terms of where you're seeing the most traction right now, in terms of where you're seeing the biggest buzz, the biggest opportunity, where is it?
Well, there's a global phenomenon that's happening right now. We are in the midst of the largest wealth transfer in history to next-gen and millennials. So $85 trillion are going to pass to next-gen and millennial clients over the next decade, not to mention that women are playing a very critical role. They control a third of the world's wealth today, and that number is going to about a half in the next 5 years. So our focus here on the next-gen millennial and women clients and a full family approach that we're taking in the private bank is going to be significant and very important. So we're leaning into that, and we've made some great traction with the next-gen millennial and female clients.
Okay, where are you seeing that happening? Where are you building out? Where's the biggest opportunity? Is it in Hong Kong? Is it in Dubai, Doha, Riyadh? Is it in Europe? Where is it?
So it's a global phenomenon, but for us, the areas of focus, I mean, obviously is home country, which is the United States and the Americas, but also in Latin America, it's Mexico and Brazil, our 2 largest markets in Latin America. Here in this region, obviously, we've been in London for a very long time. It's a big hub for us, a big area of focus and a big area of growth, as well as the Middle East. And then as we move into Asia, we continue to be very focused on Hong Kong, Singapore, and Southeast Asia opportunities there, too. We've been on the ground for 120 years there, deep relationships, lots of upside still in that region.
How are you accomplishing that goal? In our last 60 seconds here or so, Jane Fraser has talked about right-sizing the workforce. In terms of your internal kind of headcount, your internal strategy, how are you tackling that? And also externally, who are you partnering with?
So Jane has been very bold in what we're doing at Citi. We're simplifying the firm. We're focused on 5 core businesses. We're improving the client experience by reducing bureaucracy in the business. We're now able to execute in much faster, seamless, quicker way on behalf of our clients. I know that the feedback from our clients globally has been very positive, very strong to the changes that have been being made. And we're very excited about unlocking the full power of Citi on behalf of our clients and their companies.
All right, Ida Liu, we'll have to leave it there. Global head of Citi Private Bank joining us this morning, fresh off of her travels. We appreciate her making it into the studio. Coming up on the program, JPMorgan CEO Jamie Dimon long joked about retirement. Now he says succession plan is well on the way. He said a couple of things as well, buybacks, regulatory assignments. There's a lot to digest. We're going to break it down for you next, as well as what he said about these markets. Is he still the advocate of the consumer, of the American economy? How does the geopolitics that Ida was just talking about play into all of that? All of that coming up. Stick with us. This is Bloomberg.
Taiwan is at the epicenter of the world's technology supply chain. Without Taiwan, It would be very difficult for Michael and I to do our jobs. It would be very difficult for us to serve Bill and his company. And so the technology industry depends very heavily on Taiwan. It continues to for some time.
How many leather jackets do you think he actually has? It's always a question that I kind of, when I see Jensen, I kind of thinking, was that the same one as last time? I don't know. Maybe not. That, of course, the Nvidia CEO, Jensen Huang, speaking of Bloomberg at, I think, the Dell conference, which has been taking place in Las Vegas, in conversation with Ed Ludlow. The stock's been on a tear. We got numbers tomorrow. Yeah. This is the kind of critical moments of the week, but it's interesting that the stock, having dipped, has now rallied aggressively into these numbers.
Yeah, well, I remember last time we got numbers from them we were asking, is this going to be enough? Is this going to shore up the AI story? Yeah. And yet again, we leap higher. Interesting, in that conversation we just heard there, we heard from Jensen Huang. We were also hearing from the Dell boss as well, and they were talking about these AI factories. And Jensen Huang going on to say that it's about delivering these AI factories. They are not just delivering a box, it's about delivering an entire infrastructure. It's an infrastructure that's insanely complicated. And I thought, well, I rely on people like Jensen Huang to really understand this stuff. So I hope he does.
I'm sure he'll have another robot on stage soon to kind of break it all down for us. I think what's interesting about the Nvidia story, we were talking about this yesterday as well, is this a macro story or is this a micro story? You can go into the deals that they're making with Dell, with ServiceNow, et cetera, on terms of the kind of what will be the micro deals and tailwinds of their memory chip business, of their kind of gaming chip business as well. But from a macro standpoint, if you are a fund investor, if you are a tech investor, a European investor, do you want exposure to Nvidia right now?
Well, and also on the macro front, we've talked about maybe there's a mismatch in timing here, where there's all this micro excitement around a few tech names, but it's yet to, the productivity gains that are much promised, yet to show up in some of the macro data.
If you and Jamie Dimon, would you buy back the stock at these kinds of
Nvidia.
levels? Nvidia. If you were running Nvidia, if kind of that same approach, do you buy back the stock? What do you do with the money that this company is making?
Or do you think there's too much happy talk around
Precisely.
tech?
Yeah, precisely.
But you know what's so interesting about Nvidia, and I kind of use Apple as a roadmap here, because as an Apple and the S&P 500 track each other so closely, it was actually driving the S&P 500. And in the last, I think, 2-3 months, you've seen a real divergence between the biggest member of the S&P 500 and the broader index. It feels like Nvidia has taken that place. Not only have they driven the gains, but from a sentiment perspective, any kind of mini correction you see in the broader index actually magnifies in Nvidia. And you saw that in Apple stock as kind of this macro indicator, more so than what Apple specifically as a company was doing.
What I think is that the VIX is very low at the moment, which takes me into the kind of the options conversation around Nvidia. Previous earnings, we've seen options pricing quite a lot of volatility around that announcement. This time less so, which I think is interesting as well. Why now are we getting less volatility anticipated around the numbers? Is it the market's got its arms around this? Are the kind of options on either side more sort of symmetrical and therefore balance each other? I think it's really interesting that it feels like we're getting into a new phase maybe in terms of how you price Nvidia and how you price the options around it and the potential volatility that goes with that.
Haven't we been here before with Tesla stock, where you saw this kind of this up and away dynamic with one stock, with one company that was on the edge of innovation, and at that time kind of EVs?
Yep.
Massive options pricing, to your point, where you saw, 10% swings to the upside and the downside based on these numbers. It kind of feels like Nvidia is that.
Right, maybe. And now we're thinking about AI and what it does for that specific sector, but then also what it does for a whole host of other sectors, from professional services to banking. These are businesses that are going to be disrupted, but we are yet to see exactly to what extent.
Yeah, and I think that's a perfect transition, actually. Thank you, Anna, from big tech.
Set you up nicely.
I know. I was really wondering how to do this. From big tech to big banks. Let's talk about succession there. Of course, JPMorgan CEO, lacking perhaps Jensen Huang's panache for leather jackets, but still has packing quite a punch in what he has to say, saying that bank succession plans are, quote, well on the way. This is a timetable. It's not 5 years anymore, after he was asked how long he would remain in charge.
I have the energy that I've always had. That's important. I think when I can't put the jersey on and give it full thing, I should leave, basically. The board probably, it's up to them at the time. Will I stay as chairman for a while? We'll see. But I think and we're on the way. I mean, we're moving people around.
Jamie Dimon there saying he still's got a little bit of fight left in him. Let's get more with Bloomberg's Tom Metcalf, who's got plenty of fight, joining us on stage, or on set this morning. Feels like a stage. Talk to us a little bit about these succession plans. There's a few candidates here. He's always joked that, oh, well, it'll be tomorrow. It'll be 5 days out. Don't worry about it. Who could potentially even be in the running?
Yeah, exactly. Well, it's definitely Wall Street's probably most important and favourite guessing game. And I think it's pretty clear from the recent restructuring that Dimon oversaw, there's probably three top candidates. So two of them are the co-chief CEOs of, this massive commercial and investment bank at JPMorgan. That's Troy Rolberg and Jen Piepszak. And then the other lady would be Marianne Lake, who runs the retail side of things. And, it's really, it's anyone's guess who might be, end up sort of winning out, as it were. But it's really fascinating to look at their bios, because they've all been at the firm for more than 2 decades. They really sort of live and breathe JPMorgan. And I think, as Jamie Dimon was just saying, it's one of those critical things that an executive's got to do. And as you say, for a long, long time, it's been the perennial joke of like, yeah, oh, don't worry, it's always 5 years away, whatever time you asked him. And that today was the first time he's sort of switched away from that. And that does suggest that, he's about halfway through a current 5-year retention plan. At the end of that, is that when he will, move aside? He's 68, right? So he'd be 70 or so. And, you would think JPMorgan would 100% look inside and probably look for that kind of very seamless succession plan that will reassure shareholders and kind of just reaffirm that, the strategy under Dimon is going to continue.
Does it take a lot to reassure shareholders when someone's been at the helm since 2006? This is an incredible tenure.
Yeah, no, exactly. Almost 20 years, right, at the top of the bank. And, he is obviously, one of Wall Street's, most famous figures in history, right, at this point. So, no, this is probably the biggest challenge for JPMorgan. And, you've seen a succession at, say, Morgan Stanley that went very well, was widely regarded as pretty smooth. That's probably the gold standard right now. And, of course, if you get it wrong, it just adds the confusion, it adds the sort of plenty of tension. So it'll be something I'm sure the board will be very focused on. But, of course, the challenge here is, you've got a massive figure like Jamie Dimon, it obviously involves him. I thought that line he just said about maybe I'll stay on as chairman, who knows yet? Like, how do you respond to that when you're sort of on the board?
Yeah, that will be an interesting transition. And letting go of these strings may be a little bit tricky if you happen to have been there that long. Does he think his stock is too expensive to buy back? Was that the message yesterday?
Well, it's certainly interesting seeing his comments about basically saying it's too expensive for buybacks, which, no surprise then, the shares dropped, I think it was more than 4%.
Yeah, it's down pretty hard.
Yeah, so, I mean, look, JPMorgan had been on an absolute tear, and I think there is a sort of sense of unsung, in the industry among banking that, it is a little bit sort of toppy at the moment. So, certainly a comment like that will help kind of reduce some of that exuberance. And it's fascinating, he caveated that with, we will do buybacks, but just maybe when the price makes a bit more sense to us.
Yeah, 4% drop, maybe you can do it now.
Exactly.
What about the pushback around Basel III Endgame? We were joking at the top of the programme that this sounds like the world's worst film, but he's been a sort of ever-present voice when it comes to pushing back on that further regulation, more capital requirements. And I know that the Europeans, we just heard from Emmanuel Macron earlier on, in fact last week, and he was talking about, if the US banks aren't going to implement it, then why should the Europeans? Where does this go next? We're still waiting, I think, aren't we, for a new version of these Basel rules come August. Where do we head next?
Yeah, exactly. So there's been this incredible lobbying effort from Wall Street, which, quite spectacularly seems to have paid off. And so, yeah, basically the regulators have effectively gone back to the drawing board in the US, and they'll basically review what they're doing. Now, obviously, you can expect the industry to be pushing back as much as possible. I mean, some of the things Jamie Dimon was saying, pretty startling. I think he was saying if the original Basel Endgame rules were in place, something like 2/3 of JPMorgan's retail customers would need to be paying fees. And, that's the kind of thing that probably makes the politicians sit up and take notice, because that would really impact people's day-to-day. So, it's fascinating for me, the sort of U-turn almost from the regulators. I think it goes to show just how big the pressure was that was getting put on. And as you said, it's not just a US thing. Everyone's kind of looking at these rules, trying to work out how can we implement them, look like we're, being safe and responsible, but critically sort of not imposing extra costs on customers.
Yes.
Well, about 24 hours ago, I thought it was so interesting that in the pre-market of yesterday's kind of US session, I'm kind of playing a little bit of rewind here, the entire banking sector was actually up by almost 1% on the regulation, on the fact that they'd kind of won against the regulatory story until the buybacks comment completely flipped the stock. But it was rallying. The regulatory story was in the driver's seat.
There was kind of, it's been growing, but there's been kind of this confirmation now that regulators are not going to go as far as originally anticipated.
Yeah.
And that's a huge win for Wall Street. Was it down to that? Possibly. I don't know. But it's interesting that Jamie Dimon now clearly feels that has run far enough. That actually we've had this big victory. the stock's been on a really good run recently. Maybe we're a little bit toppy at 1.8 on the price to book. Tom, just before I let you go, interesting story out of the UK this morning on card fees. Just walk us through that and what the implications are. Yeah, so the payment service regulator's just come out today. It's been doing a review of effectively certain fees that MasterCard and Visa charge, so scheme and processing fees. And effectively what they're saying is, there is no price transparency here. It's not really a competitive market. But critically for Visa and MasterCard, it's saying we're not going to consider a price cap. Long report, but sort of the gist of it is effectively it's a bit too complicated to implement a price cap, so there's other ways we're going to try and introduce... Did they give clues as to how they would do that? Yeah, it's sort of much more sort of almost mundane things like, let's make sure there's transparency. You guys need to be giving us more reporting on the UK side of things and explaining why you are changing fees. But I'd certainly say it looks to me that MasterCard and Visa have sort of dodged a bit of a bullet on the card fee front. Another regulatory bullet dodged. Maybe that's the way we tie those two stories together. Tom, great to see you. Thanks very much indeed for walking us through all of that. Bloomberg's Tom Metcalf. Coming up, we're going to take a look at which stocks you need to be watching at the open, including the pharma sector. GSK certainly in focus this morning. The firm facing a whistleblower lawsuit that could potentially cost it billions. We need to be talking as well about the new drugs that are coming out. We've got the AstraZeneca Capital Markets Day today. All of that in focus. We'll talk about it next. This is Bloomberg.
Welcome back to Markets Today. We are 15 minutes, if I can just quickly do the maths, 15 minutes away from the start of European equity trading. And the futures picture does look slightly negative, futures flat stateside. Very much feels like a consolidation day. We have some Fed speak to trade around. We're looking ahead to inflation out of the UK, which perhaps takes on more prominence because it is quite a quiet week from a macro perspective generally. And, of course, we get the Nvidia numbers tomorrow. We're waiting for Nvidia. That's the main event. But I think there's some corporate news out of Europe this morning that I think is interesting, particularly in the drug space. Yeah. I think the Astra targets that they're setting are quite punchy. Certainly, they're way above where the market would anticipate that they would be, certainly on a sort of compound growth rate. We are significantly kind of beyond where the market thinks Astra is going. So it's going to be interesting to see whether we see some catch-up around the capital market days. We'll talk to the CFO shortly about that. Still no news on BHP. The commodity story's a little bit more kind of finely balanced this morning. So copper and gold both rolling over just a little bit. In line with the risk sentiment you're seeing in futures as well. And that is, again, in line with what you're seeing in the Asian story. I'll also add that even the Bloomberg dollar index is, well, now flat on the day, but it had been rolling over earlier in line with some of the macro trades. So there's strength coming into the European currencies off that. You mentioned the pharma story. You should also mention that Denmark and Switzerland were closed yesterday. So I'm curious if some of the kind of bigger heavyweights have some sort of catch-up trade and what that means for the pharma sector as a whole. Yeah, it's amazing. Denmark looms so large over European stocks these days, doesn't it? There'll be many years past where I'm not sure Denmark being closed would have had that much of an impact on, apart from Maersk, on Vestas, the global, and now they're such big global players. Yeah, some really big companies that are out there at the moment. Bitcoin's trading higher, which I think is interesting. I don't know what you do with it, but it's just always an interesting indicator in terms of kind of risk sentiment out there. That a few other asset classes are definitely rolling over and feeling a little bit more cautious. And maybe after such a big long run, that's completely understandable. But Bitcoin is tracking a little bit higher. And I'm always interested that the Nasdaq is tracking to record highs. Bitcoin's getting another little leg higher. We're waiting for Nvidia. What does Nvidia deliver? Yeah. The other thing that also people have been talking about over the last 24 hours is a stock split with Nvidia. And stock splits have given another leg higher to some of these stories as well recently. But a temporary leg higher. I totally agree. Yeah. But I'm just kind of wondering where the volatility could come from if we get any around that Nvidia set of numbers. I suppose a stock split for a company that's taken on such an iconic status in the broader retail market could have an impact, couldn't it? We'll certainly continue to talk about Nvidia. We'll return to that many times this week, no doubt. Joining us now to talk about the markets, Markets Live Executive Editor Mark Cudmore with us this morning. Mark, let's talk about the markets in a few minutes. And let's, in fact, start with the Nvidia story. We're waiting. It's consolidation day, is it here, for Asian equities, for European, for US stocks, just waiting for the Nvidia number, the big talking point of the week.
Yes, absolutely. I think this is the one catalyst that can change the narrative. Today isn't a change of narrative. It is a consolidation day, as you guys outlined just there. We're seeing some of the kind of assets that are really leading this drive for higher, whether that's Hong Kong, China stocks, or whether it's metals. They're just pulling back a little bit. But we are seeing other assets, including things like crypto, continue to go stronger. We're seeing US stocks near the record highs. So it is waiting about Nvidia. Nvidia has the ability to turn the narrative. It is a really, really important catalyst. I'm not expecting it to change the narrative, though. I think it needs to be a real shocking miss for us to go into a proper kind of sustained bearish turn from here. So I think it's more like to cause some volatility. If it misses, that'll be disappointment for a few days. But I think that overall, we'll probably be back in a bullish kind of narrative again next week, unless Nvidia is really shocking.
Yeah, I guess you wonder whether the Nvidia story catches down with the rest of the market, whether it's been overdone, or whether the rest of the market broadens and sort of tries to catch up, certainly in places, with the Nvidia story. Let me ask you about what's going on the macro front. RBA in focus. We had the minutes out there. A really interesting reminder that that rates can rise and then they can plateau, and then there can be at least a conversation about whether they hike again. That's not what they did. They paused. We know that. But really interesting reminder for sort of the global central bank watchers.
Yeah, I think that's right. And I think that's going to be, it's going to stay on the kind of narrative for the next kind of couple of months. It seems that the recent discussion from the Fed is like, we're not planning to hike rates again. We don't know where we're going to cut, but we're not planning to hike. But unless growth really rolls over the next couple of months, we're going to have that conversation again about whether maybe hikes are in order. The fact is, financial conditions remain extraordinarily loose. Now, there is a lag from policy, so maybe the previous tightening might still have a negative effect. And of course, we have this euphoria out there in the market that might need to come out. But ultimately, this is a market which is not rolling over yet. And until it does, hikes aren't going to go away as a concept entirely.
Well, speaking of the market rolling over, it's interesting that we're seeing that show up in futures this morning. You're seeing it show up in copper, gold. Mark, don't go anywhere, because there's a chart that I want to show you and our audience that caught my eye. Because, again, we're talking about that rollover in the commodity space. There's one commodity that's kind of notably left out of it. Of course, oil is a little bit lower today, an 83 handle on Brent crude. But I want to talk about the volatility you're seeing in oil, whereas you're seeing these fluctuations in gold and copper as well. This chart shows the option skew, basically. That's what that white line is, the second-month option skew versus the implied volatility in that blue line, which is at its lowest, get this, since April 2019. Mark, I want to bring you back to the conversation here. When you see that kind of, I don't know, lack of action, for lack of a better term, when you're coming to the oil space, I'm curious if oil still serves as the commodity hedge du jour that we saw a couple of years ago.
Yeah, it's a really interesting question, critics. I think there's two different dynamics here. One is the fact, you know, we had this idea for the last 10, 15 years that at some point we were going to reach peak oil and peak energy. And that's clearly not the case, given the demand for energy from data centers, etc. In fact, the rise in demand for energy is only exploding. Now, on the other side of the dynamic, not only are we kind of increasing electricity usage in a much greater use, but we are increasing alternative forms. And this kind of keeps oil in some kind of limbo of, hey, wait a sec, oil is losing its share in global electricity supply at a rapid and accelerating pace. But that overall part of the pie for electricity consumption is growing. So therefore, it's keeping the demand for oil quite strong overall. So is oil as important as it once was? It's still the most important commodity. It's still one of the most important macro assets in the world. Is it losing a little bit of its importance? At the margin, yes, but it's still one of the most important out there.
It's fascinating. It hasn't reacted at all to the geopolitical events over the last few days. Mark, great stuff. Thanks for catching up with us. The Markets Live editor, Mark Cudmore. Remember, you want to get the views of Mark and the rest of the team. Easy function to use. MLIV Go on your Bloomberg terminal. Let's go from the macro to the micro, the single stock story. Joe Easton, what do you got?
Morning, guys. We got some potentially negative news on GlaxoSmithKline last night related to Zantac, the big drug that has been a concern for that company. Now, this is a potential whistleblower lawsuit, as a laboratory that first discovered the health issues with Zantac has said that the company actually knew about the safety concerns and actually didn't report them over a number of years, and it could seek to claim back billions of dollars worth of government funding that was used for Medicare programs for this anti-acid product. Now, GlaxoSmithKline was quick to deny this and says that the claims are without merit. But we can see back in 2022, a couple of years ago, claims of Zantac causing cancer did spur a massive drop in that stock, with potentially billions of dollars being paid out in compensation. We've pretty much recovered a lot of that now, given they have settled some claims, but this is likely to bring those worries back to the forefront. On the positive side, we have just got some breaking news on an asthma drug out of Glasgow. They're given some really good data on that one following a trial. That could take the sting out of this negative story today. They think it could be worth a couple of $2 billion in sales. So we'll see which gets most of the attention in the market here in London today. Then we're also looking at cybersecurity. Palo Alto in the US once again giving a downbeat update. They have downgraded their bookings forecast for the year. Despite the increased security risk, they are saying customers slowing down in some of their spendings. And as we can see on the screen here, Palo Alto shares fell 8.7% in the after-hours trading in the US. And the worrying thing is, this is the second warning from the company in just 3 months. Back in February, they gave a very similar update about a lack of booking strength, and we saw a big drop in that stock and a number of peers. So we will be keeping an eye on a few stocks here in London, including NCC and Darktrace, and also Atos and a couple of others over in France. Finally, DIY, something I'm a bit more familiar with. We got B&Q, they've got some numbers out. The CEO warning of a slowdown in big-ticket spending. People not doing enough renovations on their houses, according to the CEO. Here's the quote on the screen. Big-ticket sales have seen a weakness reflecting the broader markets as expected. You'll remember back in the pandemic days when we all had nothing better to do than upgrade our houses. That did see a big rally. We've seen a drop since then, and this is playing into some negativity around the DIY market today. There's that stock on the screen there. We can see that pandemic rally giving up a lot of that. Keep an eye on Kingfisher this morning.
Not much movement in the housing market right now. That's probably a factor in that story as well. Joe, thank you very much indeed. Up next, we're going to take you through the market open. That is what is coming next. Fairly flat picture going into the start of trade here in Europe. 5 minutes to go. We'll be back with more details in a moment. This is Bloomberg. To go until the start of trading this Tuesday morning here in Europe. Broadly, I think equity markets are going nowhere. That's the kind of certainly the sense. We're kind of waiting for a few catalysts. We don't have any major ones today. There's some single stocks that I think, though, are interesting. The drug space, I think, is fascinating this morning. Yeah. There's a push-pull in GSK this morning. The negative news around what we're seeing with Zantac and the legal story around that, but also some positive news when it comes to an asthma therapy, which takes me on to Astra, if I can get those kind of words lined up. And Astra's interesting as well. Its numbers are really strong, and the market has not priced this level of growth that Astra is signalling this morning.
It's interesting that they decide to hold another capital markets day for the first time in 10 years. We're going to be speaking to the CFO shortly. What do they feel the market doesn't understand or needs reminding of? And maybe it is just the growth potential of that business. So we'll certainly watch the drug stocks.
Yeah, we should point out in the last couple of sessions, AstraZeneca has actually been the underperformer leading up into this. So this is kind of interesting that perhaps there is a little bit of a catch-up trade as well. In addition to, does it set the precedent, again, for the entire sector? We had Denmark, we had Switzerland close yesterday. So we have the Novo Nordisk, Novartis kind of trade, even though doing completely different things fundamentally as was part of the health sector trade. Is that something that we watch as well? There's a Spanish stock that caught my eye. I have to kind of insert my Spanish fact of the day. Telefonica reported to have a potentially bigger interest in their stake from their stakeholder criteria as well. So there might be a move there.
Can I sound like a person who knows about mobile gaming for just one moment? Because apparently Tencent had to pull their game after not very long. Dungeon and Fighter is what it was called. But this, of course, we watch Prosus. When we hear Tencent here in Europe, we think Prosus, and so we'll watch the stock.
Apparently the servers couldn't keep up.
There we are.
Maybe all the money is being spent on AI.
I was playing too much.
That would be exactly it.
Before the show.
This is what Anna gets up early in the morning.
At 4 in the morning. Right.
Days.
European equity markets just opening up this morning. The futures picture suggested we would be weaker at the start of trade. The US futures picture, though, is really flat. That consolidation day that we've been talking about all morning, very much in process, and maybe we'll see that coming through in the European session. Waiting for those Nvidia numbers later on this week, waiting for those tomorrow. But we do see a little bit of downside this morning as maybe we reevaluate the Fed story once again. Down 0.1%, on the stock 600 this morning.
These are not big moves.
No.
We're clearly in the holding pattern. I'm just checking what the date is on BNP. BNP has gone ex-dividend. So that's the reason why we're seeing some weakness there. The drug space will be interesting to watch today in terms of what we're getting there. But as we say, we are returning with Roche, Novartis and Novo Nordisk.
Yeah, and in terms of kind of index contribution, AstraZeneca right out of the gates higher by about 0.4%. Again, not a major move there, but from an index contribution perspective, it is your biggest contributor to the upside. To the downside, though, is yesterday's outperformers. It's your commodity names all the way, your BPs, your Shells, your Rio Tintos, even your Glencore, perhaps following that turnover that we're seeing in copper and gold, even in oil as well this morning.
And you were talking about Telefonica.
I was
with that little Spanish card played. Well, this is the only sector that is in positive territory right now, is the telecom space, and part of that is Telefonica, moving up a little this morning.
Well, let's just repeat the news then. I mean, I feel like it warrants it. This idea here that you did have its biggest stakeholder, Criteria, which is aiming to increase their Telefonica stake to 10%. Again, that is according to Confidential, which is a news website in I was going to say in Spanish. In Spain. I'm so sorry.
Probably in both.
I was going to say in España, but whatever. But they are looking at, again, equalizing the weight of the Spanish government in the company. So, again, that's equivalent to a buyback story almost, instead that there's just built-in demand.
It's a struggle. Other than the drug sector and a few kind of stories in the telco space this morning, it does feel very quiet out there this morning. It's interesting. We've kind of come through this post-earnings narrative. We've kind of digested a little bit of that. Where does the catalyst come from? Maybe we're not done with earnings. Obviously, we've still got Nvidia still to come. But where, in terms of the European story, which has had a really good run recently, what is it that takes us forward from here? What is the narrative that drives people to continue to want to buy European equities at this point? And I wonder where it comes from. Does it come from central banks? Does it come from the fact that we are going to see maybe more aggressive rate cuts over here in Europe than we're going to see potentially in the States or elsewhere, for instance, down under?
Well, that might fit with what we're seeing in the banking sector here in Europe. I'm sort of clutching at straws, though, here, because these moves are not big, as you pointed out at the start of the programme, Guy. But it is the worst-performing sector in Europe this morning. The sector as a whole down by 0.9%. And if we were going to see European rates coming lower quicker, coming lower by more than elsewhere in the world, then it would make sense that you didn't feel quite so inclined to load up on European banks right now.
Well, Joe did a really great job earlier in terms of flagging kind of the cybersecurity stocks as well, because Palo Alto's really kind of downbeat numbers in after-hours trading yesterday was important. The read-through isn't as negative into some of the stocks that we watch here. Atos, for example, is actually in positive territory, higher by about 0.1%. Even NCC, higher by 1.6%. So you're not seeing that read-through as much. Dark Trace, only down by 0.3%.
Little bit in the bond market this morning, but nothing really, I think, significant. We are going to hear from Lagarde a little bit later on, but I don't think she's really going to be talking policy. So I'm not sure we're going to get any kind of obvious leadership there in terms of where we see the European rate story going. We're waiting, therefore, probably for the CPI data out of the UK, maybe to give us some sort of a catalyst for what is happening in the bond market. So yields a little lower this morning, but not down by much. The real narrative continues to be, A, what we're seeing out of the United States, where we continue to see this drumbeat of Fed speak coming out, basically warning to ignore maybe the recent data that signals a slowdown in inflation and maybe some cracks appearing in the job market. And this story coming out of Australia, the Australian Central Bank talking about this idea that maybe it needs to consider what is happening with rate hikes. Hikes are back on the table. So let's talk more about what that signals for the bond market. We're joined by by Market Live's Ven Ram out of Dubai. Then, what sort of a signal do you think the global bond market should take away from the RBA's minutes, which once again, as Anna was pointing out, are talking about rate hikes once again? We've had a pause, but now we're back to discussing hikes. Is there a signal for the rest of the world out of what we're getting from the Australians?
Morning, Guy. Yes, indeed, there is a big signal emerging from the RBA. Look, the RBA, as we know, investors were pricing rate cuts from the RBA later this year. Now that has changed, that narrative has changed, and people are looking for rate cuts possibly from the RBA. The minutes this morning suggest that the RBA is not even concerned about slack in the economy. They are not concerned about unemployment at this point. All they are focused on squarely is inflation, which they said in as many words. So, and that is pretty much the same narrative if you look at it from New Zealand to UK to the US and Canada. It's pretty much the same narrative of sticky inflation. At the start of the inflation cycle, of this cycle, central banks were quick to dismiss inflation as transitory. Now they are rediscovering on the way out that the inflation is still not transitory. It's going to be stubborn, and it's probably we need to get used to inflation not at 2%, but perhaps around 3%. And that means that inflation hedges and inflation traders are going to be busy over the next few months.
OK, and so how does that square with the UK inflation data that we're set to get then? Because maybe these geographies just move to their own drumbeat. Maybe they're less united than perhaps we like to think of them as. But we are expecting that CPI print, yes, to come down from an elevated 3.2%, but down to 2.1% tomorrow. If we get a number like that, I mean, that is very much in the, close to the target for the Bank of England, and very much in pre-COVID memory, that would be a kind of low inflation print for the UK. So how do we square that?
Absolutely. I mean, if we get 2.1%, that would be the slowest since March 2021. Now, look, I mean, there is no doubt that tomorrow's inflation print is going to be a mellow reading. The Bank of England, in its own forecast, has assumed a 2% rate in spring. But the question is whether it's one and done or whether it's going to be sustainable inflation at 2%. And that sustainable is the key factor for the Bank of England going forward. Now, core inflation is elevated. It's holding around 4%. Services inflation is going to hold around 5%. So where is the real headroom for the Bank of England to go ahead and cut rates as much as they think they can? Because you can't run a negative interest rate policy, that negative real interest rate policy, and that kind of upsets the bond market's vigilantes, and that has come to bear to roost in so many economies, and that might happen again in the UK. So we can't take inflation for granted. Yes, we'll get a slower reading tomorrow, but it is what happens beyond then that is the question. By the BOE's own forecast, we are expecting 2.5% inflation by the end of the year, and they're going to be missing the inflation target for 2 years from now, regardless of what happens tomorrow. So it's the picture beyond tomorrow that matters.
Ben, let's continue our tour around the world, if we can, in terms of central banks, and go right back to the States, because, of course, we have a ton of Fed speak this week. We're also getting Fed minutes on Wednesday as well. Walk us through what might be the game changer in terms of the commentary coming out of the Federal Reserve this week.
Well, I mean, I don't expect too much of a surprise from the Fed minutes coming out. But what I do expect as a surprise is not so much of a surprise, really, because they have painted themselves into a corner by committing to 3 rate cuts this year. And that is what the March dot plot still showed when I was kind of skeptical that it wouldn't show. Now, in June, come June next month, they don't really have a choice but to revise up the dot plot. The question is going to be whether they still show 2 rate cuts even, or just 1 rate cut for the end of the year. And that is going to be the cue for the next cue for the markets. That and together the jobs market data for next month will set the tone for the markets. I don't expect too much from the minutes this week.
Ben, great to catch up. Thanks very much indeed for briefing us. Ven Ram joining us from our Markets Live team, MLIV Go, as we all know, the function to catch up with Ven and the rest of the team. Quick look at the core 6 here in Europe to get an idea of what is happening. Remember, Denmark is back, so we get Novo back trading this morning. That is the only stock amongst that group that is tracking higher, which tells you maybe something about what is happening at the centre of this market. Some weakness really across the piece, and these are the heavyweights that are all moving lower as well. We're not down by much, but we are down, I think is the narrative there, with Novocat playing catch-up, looking like the anomaly this morning, with Denmark closed yesterday for Whit Monday. Let's talk about what else is happening in these markets with single stocks. Joe Easton, over to you.
These cybersecurity stocks Kriti mentioned earlier, we haven't seen a huge move in them. We did get those results out of Palo Alto with that downgrade to bookings forecast. That stock in the US slumping yesterday. A little bit of weakness now starting to come through in Darktrace, Atos and also Exclusive Networks, those two at the bottom over in Paris. But NCC holding up. They have all got their own stories with profit warnings and also some potential bidding rumours over the past few years for a couple of those stocks, but we are seeing some declines starting to come through in that one. Then we'll take a look at healthcare, probably the busiest sector today. Obviously, GSK, AstraZeneca, both giving us updates. There we go on GSK. Potentially, it is the news of this lawsuit coming from the US related to Zantac, a potential whistleblower claim weighing on that stock today. But Astra has given us that update on their Investor Day and their long term sales target. That one coming up 1%. Potentially getting a decent read, but those are the two big UK rivals here in the UK going in opposite directions. A couple of others to bring you. Idorsia announcing that their CFO is replacing the CEO, and also some weak numbers. They're a maker of a sleep drug, an insomnia drug, that one coming down in Switzerland. And one that was really interesting to me, Onward Medical. It's a small company out of Belgium. They've got an update on a drug that helps with paralysis. Really amazing drug, helping to restore some function in some spinal injuries. That's reported in a number of outlets, and that one's up 6% this morning in Belgium. There's a UK M&A story once again, and we have got a price. I'm very happy to see that has opened. It's up 46%. It's XP Power. It's down in the small and mid caps, but it is a supplier to the energy sector. They make components, valves, that kind of thing, supplying into the power sector, gaining 46%. Yet another company in the UK getting a takeover bid. A lot of value in the UK stocks. Then we'll look at some earnings, plenty in the UK. We mentioned Kingfisher warning of a decline in big ticket sales. This is over at B&Q, also Wix as well. Guy mentioned earlier the housing market being where it is, potentially weighing on some of those sales. We've got Smiths Group as well in engineering, and SSP, maker of upper crust. We all have an upper crust at the train station, but they are actually declining. Some not so good sales from that company today. Generali over in insurance, doing a €1 billion buyback. However, they aren't seeing as much of a boost from net interest income gains as expected. So that one's down 3% today. Quick look at miners. Wanted to check in there. We had a big gain yesterday following the jump in prices of base metals, also gold, with the geopolitical tensions. But we're trimming some of those gains this morning. Glencore, Anglo, Rio and Anto all coming down here in London. A bit more of a negative session for them. And finally, we've got one morning call to bring you. This is TransferWise over at Barclays. They like this one. We don't see too many positive ratings on TransferWise, but Barclays reckons it's worth 1,000 pence. I was just reading that note, and they say the sell-off has been too much. Also, they still do get a boost from rising interest rates, given all that money on their books and the interest rates going up. So they like Wise. Barclays upgrades it. It's up 3% in London, one of the best performers in the UK today.
Joe Easton, learning so much from you this morning, like what an upper crust is, for example. We thank you so much for bringing us the update this morning from our equities team. Coming up on the program, we stick with that healthcare story he was just talking about. We're going to be speaking with the AstraZeneca CFO, Aradhana Sarin, on the company's first investor day in a decade. You do not want to miss this interview next. This is Bloomberg.
Welcome back. Good morning. Tuesday, the 21st of May. We are 16 minutes into the equity market session. We are going nowhere in a hurry. We are waiting for a catalyst. That could be Nvidia tomorrow. It could be the UK CPI data out tomorrow. Whatever it is, we're waiting for it. In terms of what we're watching today, probably one of the most interesting stories is what is happening with AstraZeneca, this huge UK healthcare company holding its first capital markets day in 10 years. This is the UK's most valuable company. It's on the FTSE 100, the most valuable company on the FTSE 100. What it's saying this morning is that it's going to almost double sales to $80 billion by 2030. It's going to launch 20 new medicines by the end of the decade as well. We're joined by Aradhana Sarin, the company's CFO, to discuss these targets. Good morning. Very nice to have you on the programme. You've got a busy day coming up, so we're really grateful you're spending some time with us this morning to lay out what you are seeing over the next 10 years. The 80 billion revenue target that you've announced this morning implies kind of 7-8% top-line growth during that period. The market doesn't see you generating those sort of numbers, or hasn't up until now. What is the market missing about the potential this company has that will get it to those kinds of growth rates?
Hi, thanks for having me. That's exactly why we're actually hosting this Investor Day here today at the Disc. We are very excited about this bold ambition that we've set for 2030. And it's actually not just one medicine, but a whole portfolio of medicine that we will highlight. The breadth and scope of our medicines is truly incredible, and it ranges everything from oncology and rare diseases to the medicines in biopharma for metabolic disorders as well as respiratory. And the growth that we anticipate is both from existing products as well as the 20 new medicines that we expect to launch by 2030.
It's really interesting you haven't included obesity in that list. Maybe we'll come back and discuss that in just a moment. But oncology clearly absolutely front and centre. As we work our way through this period, how big is oncology going to be for AstraZeneca as we get to the end of this period? How big a slice of the pie is oncology going to represent?
You know, oncology continues to grow very strongly. Today, oncology is about 40% of the business, and we expect very strong double-digit growth in oncology, both in new medicines as well as our existing medicines and new indications for those medicines. Overall, we have over 120 phase 2 and 3 studies going on for our medicines. And again, we're working on a whole bunch of new medicines that you'll hear about today.
Aradhana, talk to us a little bit about your manufacturing plans here. Recently, there have been investments in facilities in Dunkirk, Singapore, Liverpool, even Maryland as well. In light of some of the kind of crackdown that U.S. regulatory authorities are putting in terms of where supply chains extend into Asia, how is AstraZeneca tackling that manufacturing story?
So our manufacturing investments are very strategic. They are aligned very much with the new modalities and the new technologies that we have in our pipeline. So the announcement, for example, in Maryland is for cell therapy products, which we see as sort of a completely new modality that will change how cancer care and autoimmune diseases are treated. What we announced a couple of days ago in Singapore is for antibody drug conjugates. We expect that antibody drug conjugates will replace traditional chemotherapy over the next decade. And so we're making these investments ahead of what we see coming in our pipeline because we know that these medicines have the potential to be very large medicines.
Well, speaking of your pipeline and these targets, even just in terms of releasing the new 20 medicines you're looking at between 2030, that's already beating some of the estimates that you had laid out, I want to say just a couple of months ago. Aradhana, talk to us a little bit about the buyback story here. Some of your peers are executing some really big buybacks at this time. If you're looking to have this much success in the next 5-10 years, where do you stand on returning some of that capital to shareholders?
So our capital allocation priorities haven't really changed. First and foremost, the capital allocation is back investment into the business. We continue to invest, as you mentioned, in capital plans to sustain that growth, but also we invest somewhere between, low 20s% of our revenue in R&D. Our second is to maintain a strong investment grade rating. We had taken on significant amount of debt as we did the Alexion transaction back in 2020, early 2021, and we've reduced that leverage and today stand at under 2 times leverage. Thirdly, we are returning capital to shareholders. At our recent annual meeting, we announced an increase in our dividend. So dividends is generally our way to return capital to shareholders, as well as obviously capital appreciation. We have not historically done buybacks. And again, we look at total shareholder return, so the appreciation in the stock, as well as the return of capital via dividends.
Aradhana, good morning to you. Can I ask you about obesity drugs? Clearly, you've been very successful in oncology, and the business has focused on that and on other areas. But around obesity, that's where a lot of the market chatter and excitement has been of late. What is Astra's plan when it comes to obesity?
So we have an oral molecule, an oral GLP-1 that we're working on. We are going to begin various 2 different phase 2s this year. In addition, we have an earlier molecule, which is long-acting amylin. Both of those mechanisms are targeting weight management. And most importantly, our strategy is actually to combine them with agents that help with comorbidities. So in addition to weight management, many of these patients actually have heart disease or kidney disease or hypertension or high cholesterol. So it's really being able to provide a single solution and single oral solution for these patients. And that's really what we're focusing on. And we're going to do studies that show the outcomes with these drugs are very beneficial. So that's the hope and expectations for the weight management projects that we have in our pipeline.
Aradhana, we've talked about the production facilities that you have in lots of different parts of the world. Clearly a very global business, still based in the UK, and you're coming to us from, I know, your R&D facility in Cambridge. How committed to a UK listing is a business like AstraZeneca, do you think? It's much talked about here at the moment about certain very high-profile businesses thinking about possibly listing elsewhere, in the United States, for example.
Well, we're very happy with our primary listing here in the UK. As you mentioned, I am here at our Discovery Centre, which is called the DISC in Cambridge. This is a brand new facility, really state-of-the-art, and we have over 2,200 scientists working here. You know, for treatment for cancer, we do expect that our portfolio of medicines in oncology, for example, will be able to potentially treat over half of all potential cancers by 2030. So, again, we have very ambitious targets, not just financial, but also in the way we're transforming care.
Can I carry on the conversation and talk more about geography? The United States has its Biosecure Act, which it's pushing through now. The UK, there are rumblings about something similar. Astra is a company that has invested heavily in China. Are these issues going to become more problematic? Is that investment in China going to become more difficult? Are you worried that the UK may ultimately go down the same route that we're seeing with the United States and its relations to China?
We have a very large and successful business in China, as you mentioned. And not only is it a commercial business, but I think because of our standing and history in China, we do have access to a lot of research that is also coming out of China. And we've done licenses and partnerships and BD transactions with companies, with innovative companies in China. We've also invested in manufacturing in China. But again, our supply chains are very robust. Those were tested during COVID, and we did not miss a single dose for a single patient across the globe. But also they're segregated in ways. So, for example, some of the facilities that we have in China actually supply China for China or in the emerging markets. So I think we try to manage our entire supply chain network. So it is very mitigated from a risk standpoint.
This is a slightly left field question, but I'm going to pose it anyway. UK universities are really struggling with foreign students right now, and how we deal with foreign students here in the UK is becoming a sort of hot political issue. How much does AstraZeneca rely on foreign students coming through places like Cambridge in terms of providing the knowledge base that you ultimately rely on to create new drugs?
Well, I can't comment specifically on foreign students or not, but we do have a very large program to support the university. So, for example, here in Cambridge, we work closely very much with the university here. We also have a PhD student program where we provide internships for those PhD students, and not just, again, in Cambridge, but across the UK. So, again, our intention is to support science and to support research, regardless of where those students come from, and really help develop the best medicines.
Aradhana, thank you very much. Aradhana Sarin, AstraZeneca CFO, joining us there. A red headline across the Bloomberg terminal around the chip sector, the Dutch chip sector, ASML, TSMC can disable chip machines if China invades Taiwan. We'll certainly get more on that story, dig further into that when we come back. We'll also be talking banking in Europe. The CEO of SEB will be joining us, Sweden's largest bank. That conversation coming up next. This is Bloomberg. Welcome back. This is Markets Today, 30 minutes into a European trading session that looks slightly negative, waiting for news flow surrounding tech in the shape of Nvidia tomorrow. But in the meantime, really big story dropping across the Bloomberg terminal, an incredible story, in fact. ASML and TSMC can disable chip machines if China invades Taiwan. This is according to people familiar with this who've been discussing it. Officials from the US government have privately expressed concerns to both the Dutch and the Taiwanese counterparts about what happens if China's aggression escalates into an attack on the island, and this is what the response has been from these chip makers.
So they have the ability remotely to disable these
lithography.
These sort of extreme UV machines. I'm told they're the size of a bus, so these are big pieces of kit, so you can disable them remotely if there was any... I wonder at what point that decision would be made.
And by whom.
And by whom, I think, is probably a critical question as well. But it's interesting that this is a lining up of Taiwan, the Dutch governments and the US government in terms of their concerns around how the supply chain does function and how critical these chips are, really, to sort of the US security position, which it's keen to maintain.
And to your point, the context is everything here, right? Because the sanctions were imposed already on those sales to China, I want to say about a year ago, and the U.S. has been really pushing the Dutch government to impose more of those restrictions. At the same time, the ASML is saying, we want to expand, we want to even leave the Netherlands, potentially talking about a bigger kind of footprint in London and elsewhere, and really having the Netherlands also deal with the political aspect of that as well. ASML is getting caught in all of those kind of cross strings. And when you look at the revenue breakdown of ASML in particular, yes, the U.S. makes up more revenue, but not by that much. It's still, they have still a subscription point to China as well. I think something like 20% of revenue comes just from China.
Yeah, the company expects as much as 15% of this year's sales to China will be affected by the latest export control measures.
New Dutch government coming in. Just want to sort of fold that into the equation as well in terms of how would that Dutch government, what role would that Dutch government play in this process where it would be called upon to sort of make some decisions around kind of when these machines do and do not get turned off?
It's a really interesting dynamic, again, and where ASML kind of has to, and like several other companies, AstraZeneca, for example, we were just talking about the China impact there as well. This is a question a lot of companies have to deal with. At what point do you take that revenue hit to deal with the geopolitics of the situation? That's something that even traders can't seem to get their head around. Something that they perhaps can get a little bit more of their head around, arguably, relative to the geopolitics, is what's going on in monetary policy. We keep talking about this on both sides of the Atlantic, with the Federal Reserve, with the ECB, of course, and also with the Riksbank, which brings us to our next guest here. The deputy governor of the Riksbank says the krona's weakness remains a concern for the Swedish central bank. The Riksbank started cutting rates this month, reducing the benchmark rate to about 3.75% and outlining 2 more cuts in the second half of the year. This continues to be a conversation about who front runs the ECB. Doesn't even matter. We speak now to someone on the front lines. CEO of SEB, Sweden's largest bank, Johan Torgeby, joins us this morning. Johan, a pleasure to have you on the program. Let's kick off the conversation with that monetary policy story. From a broad macro standpoint, there's a lot of concern about what central bank front runs the Federal Reserve, or whether even the Swiss National Bank or the Swedish National Bank front running the ECB is that big of a deal. Talk to us about the impact on a bank like yours.
Not really, I would argue. I think the sensitivity for interest rates in Sweden is pretty large. We have now, the last data point, 90% of all mortgages we write today are floating rate. So as you might recall, we've had a pretty dim outlook for the last 2 years. We've been one of the worst performing economies in Europe. And now, of course, this whole thing changes, where rates are coming down, the Riksbank goes early, and we will obviously think we have a very positive impact on the economy, as so much of the indebtedness is in floating rate. But in the longer perspective, it doesn't really matter if it comes a month or so before or after. Many people would also argue that the independence of the Swedish Riksbank, or the central bank, was a key measure here. I don't believe it's that important, but obviously they did show that they can move first.
It's interesting that you mentioned kind of where the fiscal authority lies in that as well, because one of the concerns in broader Europe is the imposition of windfall taxes when you see it in Italy and Hungary as well. There's talk of it in other parts of Europe. Of course, your business has large presences there. Are you concerned about some sort of bleed through into Sweden? And also, how are you dealing with some of those rules that are being imposed in other parts of Europe?
We have been exposed to the notion of bank taxes or windfall taxes, or as they sometimes call it, solidarity contributions for 3-4 years now. This is definitely widespread. I believe it's important to just, separate the alpha versus the beta in banking. So what has happened over the last 2-3 years is, of course, that rates go up, and beta, things you cannot control, gives you some tailwind. And of course, when you make this much more money without necessarily writing more business or doing more good things, there will always be a political pressure to see if you can fund governments. And the population has also shown quite clearly that this is an acceptable tax increase to do. So this is, as a banker, of course, quite worrying, as it is very short-sighted. And now this whole thing has changed. So we are now looking into NII headwind, not tailwind. And I really hope that these taxes and this kind of beta that we all benefited from is put in a larger, longer-term perspective.
Whilst the banking sector was benefiting from NII tailwinds over recent years, Johan, certainly the commercial real estate sector was suffering at the hands of those higher rates. Talk to us about where we are in the real estate story in the region. Do you think that the sector is out of the woods yet?
We have never been that concerned around the sector. So for the last year and a half, I almost feel like I've been a CEO of a real estate company talking about real estate, which I'm not that good on. But it's been very, very topical. It has definitely had an impact on the Swedish krona, is my belief. We've had a very, call it almost a muscle memory coming up, where you don't buy banks and you don't buy real estate into a recession. But all that has changed. And I think it's important to distinguish between a real estate company and investing in it versus a bank who has credit exposure often secured. And we are not really worried about the second one. They're not out of the woods to the extent that rates are still, quadruple what they used to be 2 years ago. Any company who has a levered business model, who needs to carry a quadrupling of interest cost, will of course have some struggle. They need to make more money. However, when it comes to worrying about the financial stability, I'm not very worried.
OK, so we could put you in the camp of a bank that extends credit to that sector and no closer than that. But on that front, Johan, are you extending more credit to commercial real estate or pulling back? What's the stance?
This is the strategy for SEB is always to be quite cautious on real estate exposure. This was introduced in 1991 when we had the near-death experience in this country, also affecting the muscle memory of what happened in the past. So we actually have call it a soft policy of never having more than 10% of our corporate balance sheet dedicated to real estate, so we don't become a real estate bank. For the existing clients that do well, we have no limitations to continue to support them. We don't have a strategy to lend more or to gain market share within commercial real estate sector.
Johan, good morning. It's Guy. We've talked about the rate cuts that appear to be coming from the Riksbank. You've talked about how sensitive the Swedish economy is to those rate cuts. How quickly will the Swedish economy recover once we start to see these rate cuts coming through? And will that benefit that we are seeing on the economic side offset, from your point of view, the NII hit that you take as a result of those lower rates?
Yeah, first, I don't know. These things tend to work with a lag, and they're very hard to predict. But given the nature of how hard we got hit by the quadrupling of interest rates, it is reasonable to assume that we will also feel the relief a bit more forcefully and earlier than many European, call it, comparable countries. This has already happened, so I can see now many signs of some optimism creeping into the economy. So we can look at the purchasing managers' indices. We are now better than the average in Europe for the first time for a couple of years. 8 months in a row, I think, we've had more optimism among the corporate sector. House price expectations, which is very important in Sweden, they've really rebounded. So they are very optimistic now that this cut that we have experienced, the expectations of at least another 100 basis points cut in the next 12 months, they're already affecting it. So I am expecting to see some tangible evidence of this optimism quite soon.
Johan, the weak currency has generated debate within Sweden about whether or not Sweden should join the euro. A, do you think that's a good idea? And B, if the economy recovers, do you think that debate will go away?
Yeah, I would say that politically there is no reason to engage in this debate right now. But as you correctly say, it is starting to happen. I hear it all the time now. It's discussed by the coffee machine. What I'm worried about, this is my personal opinion, to lock in an exchange rate to the euro because it's weak is one of the worst reasons to do so. Therefore, you can definitely look at the real fundamentals instead. And, I don't have a particular opinion. It would be very nice politically to get closer to Europe and have a say in the kind of the more important rooms. On the other hand, as an economist, I also like a floating exchange rate because they keep countries very honest, and you have this kind of bellwether barometer of how you are performing. But it is a concern. The real disposable income in foreign currency for Swedish people has deteriorated for a very, very long time. And only in the last 10 years, I think we've gone, we paid 8 kronor or 9 kronor for a euro, and now we're closer to 12. And this is, of course, not a good thing for a country, and should also be put in context of productivity. It should be put in context of competitiveness. And we've also seen a very large outflow of foreign owners of the Swedish stock exchange. And of course, that per definition is a natural seller of kronor once you move that abroad. And that is something we need to correct.
Johan, thank you so much for your time. We appreciate it. Johan Torgeby, the CEO of Sweden's SEB Bank, visiting our offices there this morning. We thank him for joining us there from Stockholm. Now, let's turn to other matters concerning European business. Bloomberg has learned ASML and TSMC have ways to disable the world's most sophisticated chip-making machines, in the event that China invades Taiwan. Let's get more on this Bloomberg scoop with our reporter, Chan Koch, who joins us now from Amsterdam. Incredible story, this, Chan. So exactly what is this technology designed to do?
So our sources have told us that ASML and TSMC have ways to disable the world's most advanced chip machines if China invades Taiwan. The remote kill switch applies to ASML's extreme ultraviolet machines known as EUVs. TSMC owns half of all of these machines in the world. So our sources said that ASML has reassured the Dutch government officials about its ability to kind of remotely disable these machines when the Dutch government held a meeting with the company on the invasion threat. So the Dutch administration has even run simulation on a possible invasion in order to better assess the risks. But TSMC can also disable these machines as ASML offers certain customer joint service contracts. So both the companies can kill these machines basically remotely if China invades the island.
In terms of the politics around this, could this potentially change the political calculus in the way that Washington, potentially Europe, kind of thinks about its relationship with Beijing and with Taiwan and its willingness to continue to sell this kit into that region? How does this change the calculus, if at all?
Right. So sources have told us that officials from the U.S. government have privately expressed concerns to both their Dutch and Taiwanese counterparts about what would happen if China invades the island, which is responsible for producing the vast majority of the world's semiconductors. Advanced semiconductors specifically. And ASML's technology has long been subject to government interventions aimed at preventing it from falling into the hands of the Chinese, let's say. And the Netherlands bans the company from selling EUV machines to China because of U.S. fears that they could land its rival and edge in the global chip war. So this secret capability to remotely kill the machines is a way to reassure Washington that China can't use these machines if they take them by force.
Is this a little too late, though? I mean, self-sufficiency in Beijing has been part of the national agenda for over a decade, arguably several decades. Does this matter in the grand scheme of things?
So some evidence actually suggests that the U.S.-led chip restrictions may have come a little too late to stem Chinese advances. As you know, Huawei last year produced a smartphone to rival Apple's iPhone using chips made with older ASML machines in combination with tools from 2 U.S. suppliers. We reported this back in October after conducting a breakdown of the phone. So Beijing has made technological self-sufficiency a national priority, and Huawei's efforts to advance domestic chip design manufacturer have received government backing. So, yeah, it may be too little too late.
Well, Charn Koch in Amsterdam giving us those vital details. We thank you so much as he, of course, breaks that news for us. Coming up on the program, we stick to the geopolitics, the political situation around the world. President Biden slamming the International Criminal Court's decision to seek arrest warrants for Israeli leaders over alleged war crimes in Gaza. The latest from the Middle East next. This is Bloomberg.
So the funerals of the Iranian President Ibrahim Raisi and the country's foreign minister and others taking place today in Iran, in the country's northwest region. The deaths were confirmed following a helicopter crash after hours of searching through foggy mountainous conditions Sunday into Monday. It's a story that we continue to monitor. We're still trying, I think the world is still trying to understand the implications of Raisi's death and what ultimately it's going to mean for the country, the region and the world. This takes us on to another subject that we're covering very carefully as well this morning. The US President Joe Biden has forcefully defended Israel against the war crimes charges that have been sought by the International Criminal Court. The ICC chief prosecutor says he's seeking arrest warrants for the Israeli prime minister and the Hamas leader. The US president calls the court's decision to target Israel's leaders, quote, outrageous. Let's get more on this from Bloomberg Horizon's anchor, Jumana Basechi, who is in Dubai for us. First of all, let's just deal with the allegations that are being made here.
These are serious allegations. Essentially, both sides, Guy, are being accused of having committed war crimes, albeit different in nature. In the case of Hamas, and specifically, we're talking about Yahya Sinwar, he is being accused of extermination, murder, taking hostages, rape and torture. Very, very heavy allegations in direct relation to the October 7 atrocities. In the case of Israel, the Prime Minister Netanyahu has been accused of committing war crimes in relation to the military response after October 7, specifically citing starvation of civilians as a means of warfare. That, in the ICC's eyes, is considered to be a war crime. Of course, both Hamas leaders and Israel were quick to refute these allegations. In response to the starvation accusation, Israelis have said that the food shortages were not caused by Israel, but were rather caused by Hamas theft and by UN incompetency. But of course, the criticism, not just within Israel, but around the world, was quick to come as well, with many, including the US President Biden, saying that it is very objectionable to draw parallels between the leaders of Hamas and Israel in this circumstance.
Jumana, you touched there on President Biden's response. Can you talk to us a little about the regional response there? What are you hearing in the UAE and in Saudi Arabia and other kind of countries in that area?
I think on this topic in particular, there hasn't been a lot of commentary come out from the region. As you can imagine, with all of the geopolitics at play here, there's been a lot of focus on the succession plans in Iran, also within Saudi Arabia. We haven't talked about this yet on the show, but a lot of talk about the King Salman's health situation, which obviously, raised a lot of questions about what might happen there in terms of succession planning as well, too. But in terms of the international community, I think it should be said that Israel's allies, specifically the U.S., were quick to respond. U.S. President Biden, again, as I mentioned, saying that this was categorically unacceptable, that there some sort of equivalence is being drawn between Israel and the U.S., Blinken rejecting the accusations as well. In terms of the European response, it has been a little bit more nuanced. The Belgian foreign minister put out a tweet saying crimes committed in Gaza must be prosecuted at the highest level, regardless of the perpetrators. The Czech premier taking a different stance, saying that including Israeli officials was frightening and absolutely unacceptable. So there you get it. If you go around the world, there have been different responses to this. But it also should be said that in practice, these arrest warrants are going to be very difficult to actually enforce. At this point, the prosecutor is looking to introduce an arrest warrant, but the final decision is going to be taken by a panel constituted of 3 judges, if they deem that there are reasonable grounds to issue these arrest warrants, and that those leaders actually did commit war crimes, at the end of the day, it's going to be up to the member states whether or not they want to actually enforce those arrest warrants.
Jumana, thank you very much. Jumana Basechi joining us there from Dubai with the latest on that story. From Gaza, we go to Ukraine. Bloomberg has learned that German officials are ready to support a U.S. plan to leverage revenue generated from frozen Russian assets. That could mean an additional $50 billion worth of aid to Ukraine. Let's talk to Bloomberg's Oliver Crook about this. Ollie, good to have your view on this. And tell us what's at stake here. Is this about the assets themselves, the revenue generated? Because I thought we'd reached some kind of clarity on the revenue previously. So what are we expecting from this G7 finance minister?
Yeah, so this is kind of the seize versus freeze debate that the United States and Europe have been having, where the United States really wants to take the underlying $300 billion worth of assets and really disperse that over to Ukraine. The Europeans have said, listen, we can do with the profits, we can do that, but there's only $3 to $5 billion a year. So there's a sort of compromise somewhere in the middle where they want to sort of issue these bonds on the future profits from the underlying assets, which would allow them to disperse that $50 billion right ahead of time. We don't know exactly how much it's going to be. This is sort of the number that's coalescing around. The G7 will discuss this. And it's also a way, yes, for sustainable financing for Ukraine, but also potentially Trump-proofing the path of financing for Ukraine.
Finance ministers are meeting in the next few days. We're going to get a decision there. When do we get a decision? When could this have an impact?
Yeah, so we should get a decision. They would like to come to a consensus on this. And again, it brings together the United States, Europe, and all the sort of major parties that would have to agree upon to get it over the line. And then we'll get it basically 3 weeks later if they can map out the architecture when you have the leaders meeting for the G7 just about 3 weeks later in Apulia in the south of Italy.
Is this the last kind of option for Ukraine here, given the kind of political gridlock you are seeing in the United States? Is this the last source of funding?
I mean, I think for the United, again, what hangs over all this G7 meeting is the U.S. election, right? And is who is going to be in the White House, and also what is Trump's policy vis-a-vis Ukraine and Russia and all the financing and all these sorts of things. That is still very much an unknown, to say nothing of his relationship with NATO. But if they got that $50 billion through Congress already, an additional $50 billion, that takes you a really long distance in financing this war, which is, as we can see, the delay from that $50 billion from Congress, the sort of cost on the battlefield has been immense. So they really are trying to get that financing under sound footing and really also send a sort of solidarity message of the G7, an entity whose sort of efficacy was perhaps in doubt at this moment in time.
Ollie, thanks very much. Bloomberg's Oliver Crook joining us here on set in London with the latest developments there. Let's step back from the geopolitics. There's been a lot to deal with, and we've gone through a whole of different host of regional questions in the last 15 minutes or so. Meanwhile, European stocks trading water to negative, down 0.3%. US futures pretty mixed and flat.
Yeah, Denmark's bank Novo Nordisk is adding the most points on the upside, but AstraZeneca not far behind, out with this Capital Markets Day, which is about to start up in Cambridge. We've spoken to the CFO, setting some really significant targets for the next 10 years. But big questions surrounding that sector. What do you do in the GLP-1 space? What do you do in oncology? Yeah. What do you do with your China assets? So some really key areas, but the market certainly likes what it hears so far.
Plenty of deal flow as well. Your one index outperformer is the IBEX 35, those Spanish stocks driven by BBVA and driven by Telefonica, both two major deals that we're watching.
M&A certainly in focus on that front.
She's applying for a passport.
I'm ready.
Well, good luck with that. Right, that's it for markets today. The Pulse is up next. This is Bloomberg.